Hi, everyone. I think as an industry, right, we go through a lot of cyclical trends, right? And there's always this question of, is it hype? Is there substance, right? But we do have things that persist, right? And I think, right, the original thing that kind of got persistent traction, right, was DeFi. And I think it's becoming clear that, tokenized assets have crossed kind of the chasm, right? This valley of death, right? Where it's looking like they're here to stay. And so rather than just pontificate about this, at you, I'd rather, show you some of the hard numbers, right? So a year ago, I was at one of the stable summits, and I said that tokenized assets are going to be the catalyst for scaling DeFi from billions to trillions. And so, sitting here today, looking at the growth, I think this claim is going to turn out to be true. So, right now, right, DeFi TVL is currently at around $110 billion. However, of that 110 billion, 12.7 billion around is in tokenized assets. Now, tokenized assets specifically as a whole, right, not just those utilized in DeFi, but just issuance alone, is at 24 billion, which is up from 5 billion in 2022. So the rate of scale there is incredible. Now, if we break down that 24 billion number, we see that this is primarily led by private credit. And so this kind of surprises people sometimes, I think, because what's usually the most visible are kind of these tokenized money market funds, right? Tokenized treasury bills, right? Like Dennis mentioned earlier, right? Like MT bill. Right, and you have your BIDLs and your super states, right, and your centrifuges, right, your Franklin Templetons. These are very in your face, but actually, right, in terms of size, the tokenized treasury market is only 7.5 billion. Right, the private credit market is almost 2 times bigger, and we'll go into a little bit more of this soon. So, we're commodities. Commodities are small, but growing. Primarily, commodities right now is driven by tokenized gold, right? And so, we have PAX-G, right, which is from Paxos, that is, I believe, 3, 4, 5 years old at this point. But you recently saw the introduction of Tether, issuing their own kind of gold-backed tokenized asset. And that is also kind of seeing rapid growth. So we should expect commodities to take a larger and larger share of the pie than they have in the past year or so. Equities. This seems to be like the dead horse that people have usually pointed to. Oh, we're going to tokenize the stocks, and you're going to be able to buy a share of Tesla or Amazon or SpaceX on chain. There does not seem to be much demand for this, or another way to phrase it might be the regulatory red tape has been too restricting. But right now, equities are summing to kind of less than 300 million in terms of issuance. So very little issuance and very little adoption thus far. Now, I want to take a look at the micro real quick, right? So these are all year-to-date numbers. BlackRock's BIDL is up 343%. Superstate, right, USTB, another kind of tokenized money market fund, up 277% year-to-date, right? Ondo, OUSG, up 318%. It is clear that treasuries are growing at a breakneck speed. Taking a look at private credit, you have something like Maple, right? Syrup USDC. Private credit is also up 204%. That's year to date, right? We're only in June. if these numbers continue, right, we're looking at, order of magnitude level of growth over the course of the year. Right, and lastly, right, even Paxos, right, holding up the commodity side, right, is up 70% year to date. So issuance is great, but what does integration into DeFi look like, right? Like there has to be a reason that we're tokenizing these assets, right? There has to be, utility that we can get out of introducing tokenized assets into the money Legos of DeFi. Well, in terms of pioneers, right, you're starting to see players like Sky and Spark, right, diversify their book into tokenized assets, right? And so this has primarily been the driven through acquisition of kind of treasury bill tokenized asset products, but they're now extending into private credit. And Grove is an example of a new sub-DAO that was just announced yesterday, right? That is going to be focusing specifically on private credit solutions, and we'll introduce about I believe like 1 to 2.5 billion in growth over the next year or so. So all in all, that is to say, right, these tokenized assets are growing, right? Issuance is growing. And, we're seeing integration into DeFi, but there's still something that's holding us back. And there is a danger here that if we don't do this the right way, we can really destroy some of these foundations that DeFi is built on, right? And this problem is that tokenized assets are not crypto native. What this means, right, is that the token itself is just a wrapper around the underlying asset. And this presents kind of several challenges when trying to do responsible risk management, especially in the automation kind of framework that we've come to expect in DeFi. So this primarily plays out in a lack of transparency, right? Metadata is not readily available, and the data that is available doesn't necessarily have kind of strong guarantees of correctness, right? And so you may have, the aggregate amount of reserves published, but you may not know what the actual reserves are, right? You may get periodic snapshots, right, over the course of a quarter or maybe annually or semi-annually, right? But it's not this real-time kind of stream of metadata, which is what DeFi protocols need to be able to appropriately handle tokenized assets at scale. And so what we're seeing right now is that, we have, right, we pointed out earlier, right, there's somewhere around 10 billion in tokenized assets integrated in DeFi right now. But the majority of that is, right, being manually managed, right? And if we really want to kind of kick this up a notch, right, in terms of growth, this is where we're going to have to kind of solve this problem. And so, right, it is this metadata that we need, right, to contextualize these tokenized assets. And so that's kind of at Chronicle what we've been focusing on over the past year, is how do we create an oracle specifically for tokenized assets, right? And the important thing here is not just, the price of the token, right? This seems to be like the thing in DeFi, right? Where we obsess over the price triggers the liquidation, right? And we call it a day, right? An oracle for a tokenized assets needs to be much more expressive, needs to be able to have much more data, needs to be able to feed that data in a very dynamic type of way. And that actually becomes very challenging from an oracle perspective, in particular from a gas point of view. So don't want to shill too long on this point, but essentially, right, what you should be looking at in a tokenized asset is that you're not getting data directly from the issuer, the issuer has some degree of moral hazard, right, and presents kind of counterparty risk. Ideally, you really want to be at the custodian level, where you have like the inside look at the reserves in near real time, right? This data can then be streamed, right, in a kind of cryptographically tamper-proof manner to any chain. And this is what is going to allow DeFi protocols, right, to responsibly kind of manage their exposure to these tokenized assets, right? I think people are underestimating, right, the risk that tokenized assets can have. I think it's kind of this. There's a real danger that a major DeFi protocol could go insolvent if we don't start being much more serious about risk management when it comes to them. I think if you look at the history of private credit in DeFi, right, there's been several instances, right, in particular, right, when Alameda went down, of protocols losing 50 million plus, right, and even some of Maker's early experiments with private credit, right, as well experienced losses in the millions that fortunately Maker was able to plug because of the sheer scale of revenue that it generates. But I worry that we are kind of sleepwalking and just saying growth at all costs is good, and not necessarily going back to dot our I's and cross our T's. So I leave you with this. I think tokenized assets are an amazing innovation that we should all be adopting and are going to change kind of the face of DeFi. But please, take a step back, be responsible. Let's build a sustainable ecosystem. Okay. Thank you so much. Appreciate it.